All right. Hello, everyone. I think it's time to go ahead and get started, and would like to first off thank you all for joining us today for our webinar. We're going to go ahead and get started. Today's presentation, we will be presenting on qualified disability expense fundamentals. This presentation today is being brought to you by the ABLE National Resource Center, which is a collaborative whose supporters share the goal of accelerating the design and availability of ABLE accounts for the benefit of individuals with disabilities and their families. We bring together the investment, support, and resources of the country's largest and most influential national disability organizations. And you can reach us at www.ablenrc.org. So just covering some logistics as we're getting started here. The next couple slides will provide you with information to access our webinar. And today, in terms of listening to the webinar, our audio is being broadcast through your computer. Please make sure your speakers are turned on or your headphones are plugged in. You can control the audio broadcast using the audio broadcast panel. If you accidentally close the panel, you can reopen it by going to the Communicate menu at the top of the screen and choosing Join Audio Broadcast. If you do not have sound capabilities on your computer or prefer to listen by phone or dial in, you can do so at 1-855-244-861, meeting code 662-510506. And you don't need to enter an attendee ID number for that. We do have captioning for today. Our real-time captioning is found in our lower right-hand corner in the media viewer panel. If you want to make that larger, you can minimize the other panels such as the chat, the Q&A, or the participant panel. So submitting questions. If you have questions throughout our discussion today, we encourage you to submit those as they come up. We'll also be opening things up for questions at the end, but please use the Q&A box to submit those questions. That's on the right-hand side. If you're listening by phone and not logged into the webinar, you may also want to ask questions, and we encourage that. You can email those questions to our colleague Lori Schaller at lschaller@ndi-inc.org. Please also note that today's webinar is being recorded, and all of our materials will be placed on the ABLE National Resource Center website. We also have information available for download from today's presentation as well, the PowerPoint and one of our fact sheet and roadmap guides. If you need any technical assistance at any point during today's training, or you have any technical assistance difficulties, you can use the chat box to send a message to our host, NDI admin, or you can also email us at amilioto@ndi-inc.org, and Al will help you out. Thank you, Al. So our facilitators and presenters. My name is Miranda Kennedy, and I am the co-director of the ABLE National Resource Center, and I'm happy to be serving as our facilitator today. We also have with us Marlene Uliski and Jim Sheldon. Let me take a moment to tell you a little bit about them and their background as we will be accessing their expertise for today's training. Marlene is retired from the Social Security Administration after a 35-plus year career. She developed expertise in developing relationships with partners across Florida to educate them on the disability programs administered by SSA to their mutual benefit. After leaving SSA, she was certified as a community partner work incentives counselor through Virginia Commonwealth University and worked with the Florida Office of Vocational Rehabilitation as a consultant to establish the Partnership Plus program under the Ticket to Work legislation. She was then rehired by Social Security to conduct training and to assist them with managing critical integrity workloads, including OIG investigations and medical and work continuing disability reviews. At NDI, the National Disability Institute, and with the Able National Resource Center, she is part of the training and technical assistance team and works on various projects across the country. She is a disability benefits expert with the Able National Resource Center, and she provides support to her colleagues, to providers, and to beneficiaries when complex SSA or other disability-related issues arise. She's also a disability consultant for the state of Florida or for private individuals. Marlene's a graduate of Robert Morris University in her hometown of Pittsburgh, Pennsylvania. Let me tell you now about Jim Sheldon, Jr., who is a 1978 graduate of the University of Buffalo Law School and is the supervising attorney of the Disability Law Unit at Neighborhood Legal Services in Buffalo, New York. Some of the projects he supervised include a statewide assistive technology advocacy project, a national assistive technology technical assistance and training project, 4 projects related to Social Security and SSI work incentives counseling, 6 different protection and advocacy projects, and 2 healthcare services projects. During the last 30 years, he has focused on work involving funding of assistive technology and Social Security and SSI work incentives, overseeing benefits counseling projects. He has worked extensively with special education, Medicaid, Medicare, vocational rehabilitation, employment discrimination, and rights of people with disabilities in general. He's handled individual cases, including litigation and administrative hearings, and has provided training and technical assistance to attorneys and advocates both within New York State and nationwide. And he has written extensively on most of these topics, including authoring or co-authoring more than 50 newsletter articles and more than 25 policy briefs. So those are our presenters that are joining us today and will be presenting this information, and they're not alone. We're making it a very dynamic presentation today because we also have with us our members of our 2018 ABLE Advisory Team. So we have Larry Angeli, who's the parent of an ABLE account owner who lives in Farmington Hills, Michigan, and has an ABLE account through the Michigan MyABLE program. We also have Edward Mitchell, who's an ABLE account owner who lives in Jackson, Tennessee, and has his ABLE account through ABLE's Tennessee Savings Program. And Katie Oliver, who's an ABLE account owner who lives in Austin, Texas, and has her account through Ohio's Stable Account Program. And they'll be weighing in on some of the qualified disability expenses that they have as well. So we'll be hearing their voices through today's training. So what are we going to be covering today? Our agenda is I'm going to be providing a review of our ABLE roadmaps. Then we will be diving into an overview of qualified disability expenses and having a discussion around what happens if ABLE account disbursements are used for non-qualified purposes, and then doing a review of qualified disability expense examples and strategies to consider when deciding whether to use ABLE funds for items or services. And then we'll get into our questions at that point. So as you have questions, be submitting them. You've got quite the wealth of resources here available to respond to some of those things. So with that, let's do a review of our ABLE roadmap to enrollment and our roadmap to independence. And as we're going into this, I want to say that our last webinar on November 29th, 2018 was an ABLE program spotlight, which featured the ABLE Now and ABLE America programs. If you missed that webinar, it's archived on our website, along with all of our other webinars that you can catch at your convenience. And we've covered a lot of territory in our past webinars, and we provide the archives as a resource to you, whether you are thinking about signing up for an ABLE account or whether you already have an ABLE account and need a little more guidance. So I want to say as part of today's webinar, based upon the valuable feedback we have received and considering the fact that we have a lot of webinars archived on ABLE Basics, we've decided to move forward to begin providing more content-rich webinars in specific areas as part of our offerings at the ABLE National Resource Center. And as part of that, we're going to be focusing on this deep dive into giving you more guidance and information you need. And this month, of course, our focus is on qualified disability expenses. But before we get to that, and this gets to the point of the slide in front of us, I wanted to again share our roadmaps with you. So the roadmap to enrollment and the roadmap to independence, these are our two roadmaps. And the roadmap to enrollment takes you from your pathway of being ABLE eligible to enrollment as you ask questions such as, what is ABLE? Who's eligible? What can funds be used for, which of course is our focus today? How do I manage my account, and how do I enroll? So if this is your first ABLE webinar you're hopping on, it's a deeper dive, and you might want to also check out this roadmap to enrollment in case this is a little bit advanced for you here today. The next roadmap we have is once you have established your account. The first roadmap gets you to the point where you've set up your account. The next one is where you've established our account, and this is our roadmap to independence, which will take you several steps further on your pathway. And it covers areas like setting my financial goals, building a circle of support, making smart financial decisions, monitoring my ABLE account, and celebrating my independence. And with each step in each of these two roadmaps, you'll see a short video which will provide you with some valuable information. And you can also, on this next slide, you can also visit the ABLE National Resource Center's website and download our ABLE fact sheet and ABLE roadmaps and share them within your networks. We've gotten a lot of great feedback from ABLE account holders who've told us that an ABLE account has given them the hope that their needs will be met in the future. And we've received some similar feedback from parents as well, who now have peace of mind knowing that ABLE is an option in their financial planning for the future. And last, we want you to know that we at the ABLE National Resource Center hear you, and we now have Spanish language versions of various ABLE resource documents, including this fact sheet and ABLE roadmap that's available for you for download for later. So what is the ABLE National Resource Center? Again, we're a collaborative whose supporters share the goal of accelerating the design and availability of ABLE accounts for the benefit of individuals with disabilities and their families. We do bring together the investment support and resources of the country's largest and most influential national disability organizations. And the map shown on your screen gives you a visual of the over 40 states across the country who have ABLE programs. Actually, currently it is 40 states. Next week it will be 41 states plus DC. But it gives you information on ABLE programs that are up and running, with more, of course, rolling out soon. Many of you know that eligible individuals can open an ABLE account in any state which does not have a state residency requirement, but with over 40 states up and running and with most not having a residency requirement, I think at last count it was 25 or more that did not have that limitation. That's a big job comparing options. So the ABLE National Resource Center has tools for you to compare options such as fees, or whether there's a minimum initial deposit, or whether there's a debit card. And it's one of the great resources on our website, and we're updating this information regularly. So as new states come on board, or as the state you might already be in has information that they're updating, keep checking out this tool, and also make sure you're signed up for our listserv as well. So with that, I am going to hand the ball over to Jim Sheldon to do that deep dive into those qualified disability expenses and distributions. So Jim, the ball is yours.
Thank you very much, Miranda, and welcome to everybody. I see we're approaching 300 participants. I suspect you're from all over the country. Good afternoon or good late morning, I suppose, to people on the West Coast and beyond. What I'm going to be talking about is ABLE account distributions. Marlene and I are going to go back and forth. And let me go into this, what you might call introductory slide. And the notion is, when you've got money in an ABLE account, a distribution is when you take money out of it to pay for qualified disability expenses, or QDEs, which you're going to see throughout. And QDEs, I'm not going to just read all this, but they're expenses for items in the broadest sense to improve your health, independence, and quality of life. And we've got this fairly long list of representative QDEs. What they say in the regulations is it includes, but it's not necessarily limited to, these things. And we'll be talking about those first several throughout: education, housing, transportation, employment training and support, assistive technology, at times we may just refer to that as AT, personal support services, health prevention and wellness, financial management, administrative services, legal fees, expenses for oversight and monitoring, and funeral and burial expenses. Now, when you look at the regulations in particular, but the law and they're actually proposed regulations, and I'll talk about that in a second. Qualified disability expenses, that terminology is to be broadly understood and should not be limited to expenses for which there's a medical necessity. I think we'll have some examples of that as we go along. Or expenses that provide no benefits to others. It's just a corollary, I think, of some of the expenses that are available that somebody may happen to benefit if somebody gets an item like a vehicle, some form of transportation. Before we move on, I want to make some general comments. Those of us that have been doing SSI advocacy for a number of years, Marlene at the Social Security Administration, myself at a not-for-profit advocacy agency, one of the frustrations of SSI recipients, and by no means are they the only ones that can benefit from an ABLE account, but one of the frustrations of SSI recipients is this $2,000 countable resource limitation. It's been stuck at that amount since 1989. There's never been a good way for SSI recipients to save up for some of the things we're going to be talking about today. There's been no way for family and friends to give the SSI or Medicaid recipient money in the form of cash that they can use to enhance their life. ABLE account, finally, as of 2014, and ABLE accounts rolling out started in 2016, is kind of a workaround that $2,000 rule. So, if you look back at, by the way, today's topic is covered in a document that I think may be going online very soon if it hasn't already, the case summary series on quality disability expenses. So if you look back at that list that starts with education, housing, transportation, the third bullet is the list. Beyond that list, the IRS has offered very little guidance. There's no list of items either in the law, Section 529A, or in those proposed regulations that lets you know what's included, for example, under transportation, what's included under education. We're going to give you some practical guidance based on our interpretation of things, but there is no specific list that's been offered by the IRS. But I want to talk a couple of minutes about some of that limited guidance. The proposed regulations were published in June of 2015. But importantly, and this is fairly rare for proposed regulations, the IRS has said we can rely on those regulations proposed format until final regulations are issued. It's been 3.5 years, and we don't really have any information on when they're going to become final. But it's been made very clear in guidance that those regulations are to be broadly construed. And what it says is the term qualified disability expenses should be broadly construed to permit the inclusion of basic living expenses and should not be limited to items for which there's medical necessity. And then it goes on to give an example of a smartphone to be used to help with communication for a person with autism. I would add, and clearly that's disability related, but when you look at the list of items, the categories, education, housing, transportation, there is no disability related term in front of them. Now, the only guidance that we have on housing comes from SSI's policy, which has been revised 3 times since 2016, but continues to include this broad definition of housing, which we'll get into in a few minutes, but it includes things like rent, taxes, garbage and sewer charges. Clearly, those things are going to be expenses whether somebody has a disability or not. So we'll be talking about how you can look beyond clear disability-related as we go through. Okay, why don't we go to the next slide? Unless I'm supposed to, I think, Marlene, you were going to be moving these slides, but, okay. What if an able account distribution is spent for a non-qualified purpose? Why is this in here and why is it near the front? We're quite aware that some people in our audience, some people who have contacted the Able National Resource Center are concerned about what happens given the limitations on guidance if I spend the money on something and then it later turns out that the IRS or perhaps the SSI program said, oh, that's not a qualified disability expense. Actually, the news I'm going to give you is fairly decent here. And I'm going to talk about IRS policy first, and then I'll talk about SSI policy. If you look at those first 2 bullets, let me read them to you, but then let me give you a practical example. If the distribution is spent for non-qualified purposes, and I'm going to pick the extreme example, it's spent on family Christmas presents. Clearly, that's not for the person with disability, not the account owner. Or if the total amount distributed during a year is more than the qualified disability expenses for that year, the earnings portion of the distribution is included in your income for the year. I'll come back to what that means in a second. And then the tax owed on the distribution, that is the earnings portion included in the taxable income, is increased by 10%. So based on another one of the webinar presentations I listened to, I came up with what I think is a fairly straightforward example, perhaps a little oversimplified, and it goes like this. Let's say you've got a person who's been putting money into the ABLE account for the last 2 years or so. They've made a total of $5,000 worth of deposits, but the balance is up to $5,500. What does that mean? $500 represents the earnings on the account. So that's about a 10% rate. Now let's assume the amount of the non-qualified distribution is $500. What part of that $500 represents earnings in the account? Well, in the example I used, about 10%. What's 10% of $500? And I'm sorry there's not a visual here. It's going to be about $50. And that's $50 of additional taxable income. Now, probably most of the people listening in on this are either in the 10% tax bracket or the 15% tax bracket. Let me just use the 10% tax bracket because it's easy to figure out. If you're in the 10% tax bracket and you've got $50 of additional taxable income, what's your tax? Extra tax? $5. And then there's a 10% penalty on top of that. What's 10% of $5? 50 cents. Again, it's an overly simplified version. If you look at the regulations, you're going to get a headache trying to read through them. My comment, this is not a guarantee, I don't think the IRS has the resources to audit accounts just to find these $500 mistakes where the tax difference is maybe $5 for the tax year, but you never know. So you need to be aware of this, and you need to try to use the account for things that are going to qualify as qualified disability expenses. Second thing I want to talk about here is the SSI policy. Well, let me start by saying SSI is going to be concerned about whether something counts as income for SSI purposes, which might reduce the SSI payment, or whether it counts as a resource against that $2,000 limit. Well, the first piece of good news is even if the distribution is for a non-qualified expense, it still does not count as income. That's right out of the SSI policy. I have read and reread that policy so many times, and I think Marlene has too. So no income penalty. What about on the resource side? Well, there's two examples where what you take out could be a countable resource while it goes unspent. The first very clear example is if it's in the housing category. And let's say somebody's a homeowner and they took out money to pay taxes, which could be a considerable amount of money. The way the SSI policy works is that money's got to be spent in the same month. If you don't spend it in the same month and that money is still in your possession as of the first of the next month, it counts towards your resources. Is there a way around that? We'll be talking as we go along about possible strategies like having a debit card where you only use it as expenses come up, or if it was a monthly rental or mortgage payment, having that money automatically deducted from your bank account, your ABLE account, assuming your ABLE program allows you to do that. One more example, and then I'm going to, I believe, turn it over to Marlene. If you take money out for any other qualified disability expense other than housing, and that money's still in your possession as of the first of the next month or for several months, no penalty, doesn't count as an SSI resource unless you've had a change of mind and now the money's just sitting there. In that case, it's going to count as a resource. Way around that, if you've changed your mind, put it back in the ABLE account. That's allowed. So, Miranda, unless there's questions, I'm just going to shoot it over to Marlene.
We'll go ahead and wait for the questions until the end, although we welcome them as they roll in, and we'll get to them when we get to the Q&A. Thanks, Jim. Go ahead, okay. Marlene.
Okay, thanks. And Jim, I wanted to thank you for clarifying the tax on the earnings portion of money spent for non-qualified disability expenses, because I'm so glad that you put it in terms that were understandable, because I want folks to understand how small the penalty may be, so that if something really is questionable, they should kind of weigh everything and use their best judgment. But on this next slide, I know, Jim, you were talking a lot about distributions. I thought that it would be important to talk about distributions onto prepaid debit cards, because for many of us, it's easier to carry around than carrying cash. And I know that some of the state ABLE programs do offer that as an option, but not all of the states offer it. So if you haven't signed up for an ABLE account yet and a debit card is important to you, as Miranda was saying earlier, there will be over 40 states plus the District of Columbia with ABLE accounts up and running. You may want to use our comparison tool to compare options and find those states which do offer this if it is important to you. But I want to go on and just address how Social Security looks at the distributions onto these debit cards. But before I did that, I just wanted to give you a little bit of background about Social Security and about their data exchange. As we know, Social Security is a huge government organization, and they have a variety of electronic computer sharing programs in place. And those programs, they're not new. They've been in place for many, many years, and they're called data exchanges. And they're in place with a lot of our partners. And the partners could be at a local level, a state level, or even at the federal level. And you may be surprised to hear this, but there's even data exchanges in place with private entities. And those could be things like, or entities like the large credit bureaus. Or it could even be with foreign governments. And those are in place so that Social Security could administer some of their programs. But on a state level, Social Security provides data to the states so that they can administer their programs. And they would be programs where they have to determine entitlement or eligibility to a federally funded benefit. And that could be programs like Medicaid or Medicare savings programs. It could be some housing programs or food stamps or temporary assistance to needy families or even other programs. But with the ABLE account, Social Security has agreements in place with the states so that Social Security receives distribution information when money is loaded onto the prepaid debit card. Now, Social Security has policy in place, and their policy is detailed in what they call the POMS, P-O-M-S, that's their Policy Operations Manual System, and it's an internal guide, and you can have access to it. It's available online at socialsecurity.gov, and if you search within the POMS, you'll find a section on ABLE accounts, and that specific reference is in the Supplemental Security Income Resource section. Jim was talking about SSI, Supplemental Security Income, and about resources. And that particular section addresses the ABLE account. And I think many of you know that SSI is a means-tested benefit where Social Security looks at your income and they look at your resources, like Jim was telling you about, in determining whether you're eligible for that benefit. And in most states across the country, if you get SSI, Medicaid comes right along with that because Social Security makes that Medicaid determination. If you receive other types of benefits, like Social Security disability insurance benefit or childhood disability benefits or disabled widows benefits, this information about money being loaded onto a prepaid debit card doesn't pertain to you because you're not receiving a means-tested benefit, a payment from Social Security. So if we look at the second bullet, when Social Security sees money loaded onto that card, they consider the distribution as a qualified distribution, and they'll ask the SSI recipient, some folks say the SSI beneficiary, they'll ask about the intended use of the funds, and then they'll exclude the entire amount. Jim was talking about, he had told you that monies on that card or in that account, it doesn't count towards income. The monies on that card, it's considered as a qualified disability expense for usage unless they determine otherwise. And there's no explanation of what that means in the POMS. So if funds are used reasonably, and I think if they're used appropriately for qualified disability expenses that we'll discuss, I would find it hard to see that there would be any issue with Social Security on that. If you look at the third bullet on this screen, their policy goes a little bit further, and it says that they may ask you to verify distribution and ask you about the intended use of the funds if you retain all or part of it into months following the month of receipt. And again, we just heard about housing expenses, how they could be counted as a resource if they are retained in the month after the distribution, month or months after that distribution was made. So what's important here is that even if there would be an issue, and we want to provide you with all the information that we can so that you understand distributions and the qualified disability expenses we'll be talking about, the money loaded onto the card, it's not counted as income, and it would only be material in determining the amount of resources when combined with your other resources when they exceed that SSI limit. So we're going to dive a little bit into qualified disability expenses. And on your screen, you'll see the 11 broad categories of qualified disability expenses that we heard about in one of the previous slides. And as Jim said, the Treasury Department and the IRS set in proposed regulations that term, and this is quote unquote, qualified disability expenses, should be broadly construed. There's no further guidance except for one example of qualified disability expenses we've heard about, and that's for a cell phone. But before we get into some of the specific examples that we'll be going through, I wanted to tell you that we will be going through each of the categories in that first column. We'll be covering education, housing, transportation, employment, training, and support, assistive technology and personal support services, and health prevention and wellness. And in addition to that, we'll be covering basic living expenses. And that's in addition to the housing expenses we've already listed. And that's a biggie because here at the Able National Resource Center, we get so many questions about housing and about basic living expenses. So what we did was we split basic living expenses into housing, and then we have two separate slides. And we'll be covering food separately at the very end of this presentation toward the end of the webinar. So if you have any questions about what may be a QDE in any of these categories, or you're asking questions about whether something you were thinking about purchasing is a QDE, perhaps just wait until we cover that slide. And then if your question is not answered, put it in the chat box or email us, and we'll be more than happy to answer any of your questions. You could send the emails to our info box, that's info@ablenrc.org, or you could email my colleague, Laurie Shaler, and her email is lschaller@ndi-inc.org. And both of those website addresses are available in this presentation. Now, with that being said, and knowing that all qualified disability expenses do not fit into one neat, tidy box or category, we've kind of tried to organize the webinar by category and discuss those expenses first, which are black and white, or clearly qualified disability expenses. And those that we could say, or we could confidently say, fall into that particular category. And then after that, we thought for some discussion, we thought we'd list some items which may fall into a gray area. And we'll talk about them and why we think maybe they fall into a gray area. And then last, during each QDE slide, we'll give you some tips or some strategies on things which are related to that particular category or things that you may wish to consider so that you can maximize use of your ABLE funds. And along with that, we have 3 of our ABLE 2018 advisors who will be speaking today, and you may want to even ask them questions in the chat box if you're curious about something that they've said. So I think with that, Jim, I want to turn it over to you to get us started again on understanding the qualified disability expenses and whether or not they have to be disability related, because just the other day I heard something QDEs referred to as qualified disability related expenses. So I'm certain that that's probably something you'll touch upon also. So Jim, I'm turning it back over to you.
Okay, thank you, Marlene. Well, I guess I'm going to dive right into it. Basic living expenses is a qualified disability expense. And I just want to reiterate, in the law itself, basic living expenses are not mentioned, but they are mentioned in the proposed regulations. And the IRS has made it clear in the commentary to those proposed regulations and in a separate policy release the same day or a day later that ABLE account owners and ABLE programs can rely on those proposed regulations, okay? I think we already said this, but it bears repeating. Qualified disability expenses should be broadly construed to permit the inclusion of basic living expenses and should not be limited to expenses for items for which there is a medical necessity or expenses which provide no benefits to others outside the benefit to the individual. And I'm going to repeat this as well. I said this a little bit earlier. when you look at those categories, and I zero in on education, transportation, employment-related, you don't see the word disability-related in front of its list of QDEs. And there is that example right in the proposed regulations of a autistic child who uses a smartphone as a means of communication or navigation. I mean, the beauty of smartphones, and one of my good friends who's an attorney but who's blind has told me that smartphones have revolutionized the ability of people with disabilities to access their environment. Smartphones, it's an interesting example because when you look at some of the traditional funding sources like Medicaid, they're going to say in their definition of what's called durable medical equipment that they're not going to pay for items, they're not going to qualify as durable medical equipment if they're useful to the general population in the absence of illness or injury. And a smartphone certainly fits into that category. Yet, as used by the person with a disability, I think it fits into the category referred to as assistive technology. The elaboration on how to define assistive technology is included in that case summary on qualified disability expenses. What I'd like to do is I kind of have a thought process of what my priority would be if I were saying which expenses to gravitate toward first if you're looking to spend the ABLE account to supplement what perhaps a person's disability payments, earnings, other income would allow them to purchase without the ABLE account. First, I want to try to connect the expense to one of the categories, but keeping in mind that in the regulations they say that's a representative list, it includes but it's not necessarily limited to, but I'm still going to want to tag it into one of those categories if I can. Second, I want to see if I can connect it to the disability. And I may sound like I'm talking out of both sides of my mouth because I was suggesting that you don't have to connect it to the disability in all cases, but it's always going to be safest if you can connect it to the disability and get a letter of some sort from a doctor or other healthcare provider and keep it in your ABLE file. If it's not disability related, but it fits in, this would be my third priority. If it's not disability related, but it fits into one of those categories, I'm going to want to be able to say that it's something that most of us would think of as a necessity of living, you know, basic living expenses. And I see some things on the Q&A that may come up later about what might qualify. And only after I've gone through those do I really want to get to things where you can't connect the dots to a category or to disability. It doesn't have to be medically necessary in the conventional healthcare provider sense. But if it's connected to the disability, you've got a leg up on having this qualify as a QDE. Let's go to the next slide. Okay, qualified disability expenses for education or employment training and support. And this list of examples, this is not the IRS list. This is not SSI's list. This is the Jim and Miranda list. I would include in examples of education or employment training and support tuition, tutoring costs, books and fees, laptop, computer, work boots, tools or uniforms not provided by an employer but required, So far, you didn't hear me say disability related. Yet some of the examples I'm going to give are costs associated with self-employment, etc. So, in the larger article, I provide some examples of a specialized summer enrichment program for a young person with a disability. Example of a therapeutic horse riding program. Any number of summer camps that specialize in serving kids with disabilities. If you've got that disability connection, all the better. But again, when I look at this category, and I think of say the college student, basic tuition, extra tutoring, books, fees, I believe those are appropriate expenses out of an ABLE account. It's certainly not a frill. It's certainly not a frill. What about related transportation to take advantage of these things? I would say yes, but here I really want to make sure that those listening in understand that you should only go to the ABLE account after you exhaust other sources of funding where you're not going to have to pay the money back, or you're not going to be depleting those precious ABLE resources. For example, the special education program. Summer enrichment program for a 12-year-old. Well, if it's truly a program to help the kid keep up with progress in his or her special education program, you can get that out of a school district. Sometimes it presents a little bit of a fight. Now, the horseback riding program, there's probably not going to be a special ed program that pays for that. It's certainly in most cases, but sometimes there's other funding available. You don't have to tap into that ABLE program if there's other funding available. So you're going to want to exhaust other potential resources first, so you save those precious ABLE funds to pay for things that can't be otherwise funded. So look at the special education program, look at the vocational rehabilitation agency, investigate what an American Job Center may provide, or an employment network under the Ticket to Work program. I will just say, for the most part, employment networks aren't going to fund the items I've been talking about. Where they're often most helpful is in providing specific employment services to get a person ready for competitive employment, maybe help with resume writing, job find, and so forth. You can investigate something called a plan to achieve self-support, and I believe in the larger article we have a link to where you can see resources on that, or certainly we can provide them. So, Marlene, I think I'm turning, well, I think we're going to hear from Larry. And
yeah, Jim, I'm going to go ahead, and we do have a question for Larry. This is Miranda. Hi, everyone. People are probably wondering who the handsome gentleman is whose picture is on the slide with us, and that would be Larry Angeli. And I know I mentioned at the beginning we've got 3 of our ABLE advisors joining us, and Larry is the parent of his son Anthony, and we have this question for him to weigh in on this. So, Larry, like many parents listening today, you began saving for your son Anthony's future in a 529 college savings account many years ago. But at this point in time, you mentioned that you're unsure about whether or not college will be part of Anthony's future. So can you tell us what you've learned about rolling over a 529 college savings account into a 529A ABLE account? And can you give us some tips or strategies that you and your family have learned along the way?
Sure. Thanks. Hopefully everyone can hear me okay. My name's Larry Angeli, talking to all of you from Ann Arbor, Michigan, so big hello. And as Miranda mentioned, in our particular experience, we began saving for our son's college education before the ABLE Act came around, and so we began saving for him in a traditional 529 plan. And as the ABLE accounts came online, we saw an opportunity to leverage the funds that we had begun saving in a 529 into an ABLE account. And perhaps, as many of you know now, the law does provide for the ability to move funds from a 529 that you may have saved in into a 529. And specifically, the rule permits money to be rolled over without any non-qualified distribution penalties. So effectively, on a tax-free basis, you can move that money from a 529 into an ABLE account. So in our particular experience, that change was made, that enhancement to the ABLE account was made in 2017. So it took a while for that to, I guess, kind of move through the system and for the various 529 providers to kind of understand that ability and provide the ability for parents to roll those funds over. So in our particular experience in early July of 2018, we began to look at how to move that money from our son's 529, which was established in the state of Massachusetts, and move it into the Michigan ABLE program. So hopefully all of you listening will have a easier experience now that some time has passed. I can tell you that early on we had some challenges with, the 529 companies kind of having the right forms to be able to roll that money over. So my first advice would be to contact your ABLE account state and ask, what forms would be necessary from either their plan or the plan that the money is being rolled out from to be used to initiate the movement of funds. In my case, the forms that were needed were from the 529 plan side to get the process rolling. And some other kind of key things to look out for with regard to those forms is that you ensure that the request for the funds is being done on a qualified distribution basis. So again, you don't have any tax implications for that money coming out of the fund 529 that's not seen as a taxable distribution. So that's point number one. Point number two is that you make sure that you also stipulate that it's a rollover payment. So in other words, you're not using it for college expenses per se, but you're rolling it over into another qualified plan. And then point number three would be that you include the full information about where the money's going, both the company and the state plan on the form, and make sure that you have the right address. This is a small thing, but in my case, there was a little mix-up on what address the money had to be sent to. So, and a lot of this money continues to travel by check instead of electronic distribution. So, the 529 provider will actually physically cut a check and mail it to the ABLE account. So therefore, you want to make sure you get kind of all the addresses correct. And then another point here is to make sure that you consider how much money you plan to be coming from other sources, because the total amount, as many of you know, that could be added to an ABLE account in any given year is only $15,000. So you want to be sure that if you're going to roll money over from a 529 plan, that you consider what other monies may be going into that account that year, money you received from relatives or other deposits that you're planning to make, and make sure that when you roll the money over, that you're thinking through the total amount, because it can't go over $15,000. And then just some basics. Just keep track of all your paperwork here. Make sure you make copies of all the correspondences and all the forms that you fill out. So that's it. And again, it took a while, but we did it. We were able to move the money over, and as has been discussed, it's been a tremendous value to our family to have that ability to be able to use those funds for some of these qualified disability expenses. And in our case, we use the time around the holidays to begin planning for our son into the coming year. And in this planning year in particular, we've had the ability now to look into the year and think about what kinds of needs he will have coming up in 2019, and be able to think about how we might leverage these funds in these various categories that were discussed today to be able to really help with his quality of life and to kind of drive towards his independence. And again, we kind of think in year-long blocks, and we've already come up with a list of 10 to 15, I would say, areas of expenses that we plan to leverage some of these funds for in 2019. So I think that's all I have to say. I hope everyone has a great holiday and a fantastic and blessed 2019. If I can help anyone out there in this area, feel free to reach out to me on Facebook or on LinkedIn. You can find my information out there.
Or you can put in a question we might be able to ask you later in the webinar, Larry. Thank you so much for giving us that breakdown and your own experience, too. This is very helpful. We always like to hear from able account owners themselves who have lived into this. So, Marlene, I'm going to hand it back to you to take us forward. Thanks, Larry.
Okay. Okay, and Jim, I think you were finished with the slide. Is that right? Okay. Okay. I think we've learned a lot. Thank you so much, Larry, for the information. And we've focused a lot on education, but I don't think we've focused enough on employment. And I was looking at the chat box through the last couple of slides. I was listening and trying to look at some of the questions that are coming in. And although this is a webinar on qualified disability expenses, I did just want to throw something else out there. And I think that there's a lot of misinformation out there, so I'm just going to take 2 minutes to say something that's not related to QDEs, but it is related to ABLE. And I just want to say that Social Security has been very responsive in issuing their policy surrounding ABLE, and their policy follows the strict letter of the law. And as Jim said earlier, ABLE accounts are a way to save without it affecting means-tested public benefits. So an ABLE account allows someone who receives supplemental security income benefits or Medicaid benefits to save over the resource limit without it affecting benefits. It is not, however, a way to shield income. I'm seeing questions in the chat box come in, and it seems like every webinar they come in, folks think that they can be working or receive some sort of income, unearned income, say from alimony or child support or a Veterans Administration benefit, and they could just immediately deposit that into ABLE or have their employer deposit it into ABLE, and it doesn't count. And that's not true. It is not a way to shield income. So working or unearned income affects SSI the same way it always has. So there's no change there, and that's really, really important. Folks get real frustrated because sometimes it's a little difficult before you understand this concept, but there's a difference, as Jim said earlier, income and resources. ABLE does not shield income. You could save as much of your income as you can in an ABLE account, and it's a great tool for saving, but you can't shield income in an ABLE account. So it still counts the same way as it always has. So with that, and I apologize for going off on a tangent there, but it seems kind of important because it shows up every time we have a webinar. I wanted to jump now to qualified disability expenses for transportation. And at the ABLE National Resource Center, I have to say that we really haven't received a ton of questions surrounding transportation, but it's nonetheless very, very important and a very crucial category of qualified disability expenses. I've seen a couple questions come in, and I think we'll address all of those on this slide. Any number of things can fall under the transportation category, and it could include costs which are disability related and some which may not be disability related. If it's disability related, it could be something like the cost for a vehicle modification. Maybe someone needs a lift or maybe special hand or foot control to allow someone with a specific disability to drive the vehicle. But what if you ask whether or not the purchase of a vehicle or the rent or lease of a vehicle or a down payment or even the monthly payment for a vehicle is a qualified disability expense? And I saw a couple questions in the chat box asking that those questions are similar questions. Now, if that vehicle allows that individual to meet their day-to-day needs, whether it's for employment or it's for school or education or transportation for medical care or for activities of daily living like going to a grocery store or perhaps seeing a doctor or dentist or visiting a friend or any number of things like that, yes, it is a qualified disability expense. Even, I believe, and I think, Jim, if you would chime in on this one, I think that associated costs with operating a vehicle would also qualify as a disability expense. Jim, would you agree with that?
Jim is on mute. Jim, you could unmute your phone by clicking on your name and unmuting. There you go.
Okay.
Am I okay? Can you hear me now?
Yes.
Yeah.
Yes.
Okay.
So what do you think, Jim?
I would say the upkeep, putting gas in it, insurance, if the vehicle itself is justified, and I think it is, you couldn't drive it if you didn't put gasoline in it.
Mm-hmm.
I think the challenge is, and you're probably going to get into this, is does that mean you can use it for just about anything and justify the gas into it? I think one has to be a little bit careful. So maybe you might want to address that.
Yeah, and I totally agree, Jim, with what you're saying. I think that you just have to be reasonable. You have to be cautious. You can't take total gas costs out of an ABLE account as a qualified disability expense, but you just have to be reasonable. And if there's some gray area, then use other funds to pay for that versus using an ABLE account and using funds as a qualified disability expense. Even something like mass transit, transportation services there, or an Uber or a taxi, that may be a qualified disability expense. Again, it depends on some other factors. And again, if it's allowing an individual to meet their daily needs, it should meet the qualified disability expense criteria. But then on the other hand, for the discussion we have, how about if you would use a limo or a small bus to take you and your spouse or significant other out on the town for a night of gambling and having fun? Is that a qualified disability expense? And I'm not trying to make any judgments, but it doesn't appear reasonable to use funds for that purpose. And when you look at the distribution from the standpoint of the regulations and the information published today, I'd have a hard time showing that it helped to maintain one's health, independence, or their quality of life. So I think you just have to be reasonable about expenses related to transportation or all qualified disability expenses in general. Miranda, I think I'm going to turn it back over to you for a moment and talk to Edward, one of our esteemed ABLE advisors, and talk about some strategies that he used for transportation expenses. And before you jump in with Edward, I just want to thank Edward publicly for all he's done and for his powerful testimony on the Hill. Thank you, Edward.
Yes, thank you, Edward. All of our ABLE advisors are esteemed, but yes, thank you for referencing that, Marlene. And yeah, we have another one of our ABLE advisors who works with the ABLE National Resource Center here, Edward Mitchell. And Edward, I'm going to throw this question to you. You know, this topic area is near and dear to you. Like many of our listeners who live in rural areas, you being in rural Tennessee, you see accessible transportation missing or limited in your community, especially since one of your part-time jobs is serving as an independent living specialist. So to give individuals just a little background on how vocational rehabilitation services can fill in some gaps so that ABLE funds can be retained for other qualified disability expenses, can you tell us a little bit about how VR helped you personally after your accident with modifications to a vehicle you purchased yourself? And two, will you be using your ABLE funds for purchasing another vehicle?
Thank you so much for that wonderful introduction. Yes, you want to use all of the resources available to you. Actually, I have not been disabled all my life. My injury occurred in 2003 when I was a victim of a hit and run accident, which left me paralyzed with a C5, C6 incomplete injury. But I got started on my vocational rehabilitation quest early while in high school, while trying to find out every option in order to pay for college. Eventually, I was able to, through the help of my VR counselor, was able to pay to go to a private, historically Black college here in Jackson, Tennessee, Lane College. And with using vocational rehabilitation, if I would have had an ABLE account set up at that time, VR allowed me to access funds in order to pay for assistive technology, such as a custom computer, also Dragon naturally dictating software, as well as a copier scanner for my dorm room and a voice recorder. Also, under vocational rehabilitation, it allowed me to cover the cost of my textbooks, as well as if at that time I needed nursing care, even though I was under a waiver program at the time, VR would have paid for a portion or all of that nursing care while I was in for school hours, living on the dormitories. Now, I can only speak from the standpoint of Tennessee vocational rehabilitation counseling, is that my VR counselor and I established a timeline of certain goals and benchmarks that I needed to achieve. Once I met those benchmarks, I was able to justify, along with the success so far in my college career, in order to move to the next step of a vehicle modification. But before I got to that vehicle modification part, I had to also conquer the benchmark of getting a driver evaluation. And that driver evaluator came from Florida, and between the years of 2004 and 2007, he certified me in order to drive with his recommendations. With having cleared that hurdle, we were then able to approach the next step in vocational rehabilitation in order to get them to pay for the modification of a wheelchair accessible vehicle. In essence, a lot of people get it misconstrued. Vocational rehabilitation does not pay for the vehicle, but they pay for the modification. So at that time, in 2007, 2008, I paid for the cost of my van, and vocational rehabilitation paid for the driver evaluator, the wheelchair ramp, and the special hand controls that are used in order to allow me to drive. And actually, I use a Debit high-tech hand control system, which is all electronic. As this proceeded, and now where I'm at, is due to the numerous recalls and the short manufacturing lifespan of my vehicle, I'm in the process of trying to purchase another wheelchair accessible vehicle and getting a second approval from vocational rehabilitation for modifications. Great news, as of this December, I was actually approved and my case was reopened, but it took me saving numerous receipts and documentations of why I needed to get another vehicle, and the total cost that I put into the vehicle of maintaining it was near $35,000 to $40,000. So that allowed them to open up my case, and actually we're in the process of moving to that vehicle modification portion of VR. And I will certainly be using the funds that I've accumulated in my ABLE program to help me purchase my next wheelchair accessible vehicle, because the cost of minivans are only going up. A minivan cost right now is near $40,000 or $50,000. So I definitely will be using my ABLE account to help offset some of that cost. But along with that, I also apply for different grants that are out there. It just takes time to apply, follow the rules and regulations, so then you don't have to drain your whole ABLE account when there are grants and other funds out there to help. Investigate programs at your local centers for independent living. Spend 15, 20 minutes a night searching different types of grant programs. If your mother or father works for a certain corporation, sometimes there are grants out there that are available. But you just have to be diligent, right, and sometimes just keep your fingers crossed because you never know what is out there.
Great. Thank you so much, Edward, for sharing your experience with us. We appreciate that. I'm going to go ahead and hand it back over to Marlene now.
Okay, thank you. Thank you, Edward, for your valuable input and all of the information that you've provided that will actually help other ABLE account owners navigate ABLE and understand some of the strategies available to maximize the usage of their ABLE accounts. On this particular slide, I'm just going to quickly go through the strategies because we're running a little short on time and we want to be sure that we do cover housing and food expenses, which are really, really important. The strategies here, as Edward was talking about, investigate VR services for modifications to vehicles, investigate any other transit services, whether it's paratransit or faith-based services, med waiver services, to see if that's something which you can use in your community, and also investigate some of the Social Security work supports like the Plan to Achieve Self-Support and impairment-related work expenses. I was going to go a little more into those, but I think in the interest of time, we need to move on to the other slides so that we can also have our other ABLE advisor, we can hear from Katie also. So on the next slide, I just wanted to say that to summarize a little, Jim wrote a brief on qualified disability expenses, and it is posted to our ABLE National Resource Center website. And he pointed out that the ABLE Act and the regulations, they really don't give a definition or provide a definition of assistive technology. So it suggested that the Federal Assistive Technology Act definition be used. And he has that defined actually in the brief. So I encourage you to go and read over his summary. It really has great information in it. He's published about 4 so far. He has 2 more in the works right now. They're really, really a good resource. So anyway, with that in mind, there's a couple of examples on your screen. Excuse me, a manual or power wheelchair, speech generating device, screen readers. It could also include things like hearing aids, other types of communication devices, computers, as Edward talked about, maybe apps. It could be personal support services, support services provided to an individual both within their home and outside of their home. For discussion, I wanted to jump to that second bullet, the modified video game controller, and I want to turn it back to you, Miranda, because there's something really interesting and unique, I think, that Katie has to say about that one. So, Miranda, I'm turning it back to you.
Okay, great. Thank you, Marlene. So Katie, our ABLE advisor, Katie, it's great seeing your smiling face there on the slide, but we know that every individual with a disability has unique needs. And because of your disability, you needed something really unique, a special modified accessible video game controller for playing games with your husband, Brandon, and with online friends. You know, you tell us that it's something you enjoy and something you feel increases your quality of life. So can you tell us why you cannot play without this device and how it will help you?
Sure. Can everybody hear me okay?
Yes, we can.
Okay, just wanted to make sure. So my disability is cerebral palsy, and that means that my my motor capabilities are somewhat limited. I have been playing video games my entire life, but the types of video games that I've been able to play without modifications have been rather limited. I normally do turn-based games, stuff that's not too action-oriented, doesn't require a lot of quick reaction because I'm not great at that. However, since being able to open my ABLE account, I learned about a nonprofit organization called ABLE Gamers, which helps people with disabilities either create or find solutions that will help them have greater abilities to game. And so I have been in touch with them. I haven't heard back from them yet. I've heard from them just sort of tangentially to say that, you know, I am in line, but they deal with people on a first come, first served basis, and that's fine. But I'm hoping that they're able to give me some solutions that will help me play more action-oriented games like Red Dead Redemption and Assassin's Creed. Because, you know, even though I'm able to watch my husband and my friends play these games, I really would like to play them myself. And even though this might not sound like a traditional able account expense, I believe, and from what I've heard in talking with Miranda and folks at NRC, they also believe that this would be a qualified expense because it's something that I need as a result of my limited mobility that's caused by my disability.
Great. Thank you, Katie, for sharing your experience with us and what you're using one of the things you're using to your ABLE funds to purchase in addition to saving for the down payment on that house you're looking at getting. Okay, so I'm going to hand this back to Marlene then.
Okay, and thanks, Miranda. And I'm not going to go through all of the strategies on your screen, again, because in the interest of time, I really want to get to housing and food because there's so many questions that come in. All of the slides are available. You can download them. You can access them at our website, and you could go to some of these links later on to see what some of these resources actually say. So in this next slide, or I'm sorry, Jim, sorry, I was going to take your slide from you. Jim, I'm turning it back over to you for the slide on housing.
And I'll try to quickly move through these. I've already gone through this list, and one of the things I want to urge is when I started reading the SSI policy, I was really taken aback because if you pay for rent or other housing and costs out of the ABLE account, no effect on the SSI payment because it's not considered income. Whereas if your parents just helped you out with housing costs, that would be considered in-kind income. Your SSI payment would be reduced by up to a third. This year it would be about $250 reduction. That is absolutely huge. Why don't we move to the next slide because we'll just leave some of this stuff for people's reading. So qualified disability expenses for health, prevention, and wellness. The thing I want to emphasize here, traditional medical costs, to the extent they're not otherwise covered, that's a no-brainer. But look at that under discussion, that first and second bullet. Alternative modalities such as massage therapy, chiropractic, acupuncture, biofeedback. Only some third-party health insurances are paying for these things. They're certainly not available through any Medicaid program I'm familiar with, possibly with the exception of chiropractor, and certainly not gym membership. But these are certainly things that are finding their way to some degree into private insurance. But to the extent that these things are not covered, again, going back to my priority strategy, always try to get a healthcare provider to give you a letter recommending it so that if you're ever audited, there's almost no question that this is a disability-related expense. So on to the next slide as we march forward, looking at the time here. This one is on expenses for food as a qualified disability expense. Certainly, as you read the regulation, proposed regulation, and its reference to basic living expenses, I guess food is a basic living expense, but I would strongly urge people, make sure you take advantage of Supplemental Nutrition Assistance Program funds, the food stamp program. I would probably only go to food out of the ABLE account if you can't get the food covered through food stamps, through your basic income from SSI, employment, or other sources. I'd be disinclined to try to cover restaurant expenses out of the ABLE account. We don't want to sound, stingy, but there's so many expenses that can qualify. We suggest using the ABLE account for those. Use your other funds for things like restaurant expenses. And then the last thing I want to cover is the Medicaid payback provision on the next slide. And this really has to do with when the ABLE account owner, the person with a disability, dies. Under the federal law, it allows the state of residence that was providing Medicaid services from the date an ABLE account opened until the date of death to seek payback from whatever remains in the ABLE account, subject to whatever outstanding qualified disability expenses are still there. The state it's allowed to make this claim. It's not required to do so. So back to you, Marlene. And I think you're going to talk about best practices.
Okay, I am on mute. And Miranda, do you want me to go over the best practices, or do you want to skip over that and get to questions? What would you prefer?
Oh, I was on mute too. Why don't we go ahead and talk through best practices? I wanted to give us room for this. The other thing is, we know we have had a number of questions coming in. We've folded some of those questions into answers in different sections, but if we don't have time, we've only got another 8 minutes. What we're going to do is capture all of the questions and provide those questions with the responses with the archive that we post. So don't worry, your questions will be answered. You might want to tap into, and I've provided the link in the chat. So go ahead and copy and paste that. If we don't get to your question today, we will be posting that next week with the archive. So I just want to mention that. So Marlene, why don't you go ahead and cover the best practices?
Okay, all righty. Thanks, Miranda. Some of the best practices are always maintain records and receipts for account distributions. It's so important. I can't encourage you enough on this first bullet. Although, as Jim had said earlier, it seems unlikely that the IRS will audit ABLE accounts. There's always that possibility that something like that could occur, and you want to be prepared if something like that happens. I recall my tax practitioner telling me, and he actually tells me this each and every year, that when the IRS does do an audit, they generally focus on one particular area. However, if they have suspicions in other areas, they will expand their audit. So I just kind of think it's real important to maintain those receipts just in case they are needed at a later time. Also to make responsible decisions about qualified disability expenses and exercise good judgment. We've been talking about that all along. As we said a little bit earlier, purchase items or services that are clearly qualified disability expenses if you need to take that money from your ABLE account, but those that are gray or something that may be subject to dispute, try to use other funds other than ABLE funds if you have them available. We also recommend using ABLE funds for items or services that clearly fall within one of the QDE categories, or those recommended by a healthcare provider, or which most people would view as basic living expenses. Those will least likely be disputed. Investigate all potential no-cost options, no-cost funding sources before using ABLE funds for any services of support. Throughout this webinar, we provided you with a whole lot of resources to explore. We talked a lot about the Office of Vocational Rehabilitation. There are offices in each state in the country. We talked about, just a little though, about Social Security work support, like the Plan to Achieve Self-Support or impairment-related work expenses, if you're interested in those. Visit Social Security at their website at www.ssa.gov. Try not to go into the offices because many of the offices have so much work and they're a little bit overwhelmed. If you could find the information online, it's always easier that way. You can also visit choosework.ssa.gov to find a community work incentives counselor or community partner who may be able to provide you with advice or assistance if you are working and trying to save some of your money into your ABLE account. Investigate the Department of ABLE or Veterans Affairs, the American Job Centers, your state AT agency, the Medicaid waivers, employment networks under the Ticket to Work legislation. Do your homework and explore all your options so that you could preserve more of your ABLE funds so that they can continue to grow. Continue to educate yourself, keep up to date with ABLE, sign up for our monthly newsletters, sign up for our webinars, and we encourage you to write in and to ask us questions if you really are unsure about something. But I think today this webinar hopefully has provided you with a lot of answers to some of your questions. Hopefully you did get the answers that you needed. But again, if not, then just write in to us and we'll be more than happy to help you. You can also contact your state ABLE organization and they're more than happy to assist you as well. So with that, Miranda, I think I'm going to turn it over back to you. Miranda, you are on mute. And I'm not hearing anything, so what I'll do is just cover the resources just quickly. We have a link to a variety of different resources. We have a link to the ABLE Act, if you would like to read that. It's kind of some heavy reading. Good if you have insomnia. I'm just kidding. The second reference there is the IRS code. It's from the Code of Federal Regulations, published in the Federal Register, and it's the proposed regulations on the 529A ABLE account. The third is IRS tax highlights for people with disabilities. The Social Security policy, I know several of you have asked about it. I've seen questions in the chat box asking where is the SSI policy. That is the direct link to it. If you're asking about information on the data exchanges, at the very end it references the data exchange, but it does not go into the detail that I went into. And it doesn't go into the detail because that's covered in other issuances within their policy manual instructions. You just need a general idea of how that works and know that it is there, but that's referenced at the very end of that SSI policy document. And lastly, the link to our center, the ABLE National Resource Center. We have a variety of webinars available. You can access our newsletters. You can access Jim's outstanding case summary series. I just love every time he comes out with a new one. It may be heavy reading for some folks, but for me, it just provides really accurate, on-spot guidance. So I encourage you to check it out. So Miranda, with that, it's back to you.
Okay, great. Thank you so much, Marlene. And in our last moment that we have here, I want to reference that case summary on qualified disability expenses. That's our most recent case summary that Jim took the charge and the lead on writing up for us and researching. We have that posted with our materials from today's training on the link. That's also going to be the post where the archives will show up when this webinar has been recorded and posted there. But that case summary and today's PowerPoint are already posted on that link, and I've provided that in the chat box. And that's also where you're going to be able to go to find some of the questions that were answered in the chat box, or questions that were asked in the chat box or the Q&A from today that we didn't have time to get to today. We will get to that, and we will post the questions and their responses on that link. So take that with you, and thank you so much, everyone, for joining us here today for our presentation on qualified disability expenses. If you have any questions in the meantime, you can certainly always call us at the call center or send your email inquiries to info@ablenrc.org, where you'll have access to Marlene and Lori and Peggy, our team of experts, who will help assist you in getting to the resources and the answers that you need. Thank you so much, everyone. If you could take just a moment to fill out the post-training survey. We appreciate your feedback. We're trying to always be responsive to your needs out in the field. So please take a moment and let us know what you thought of today's presentation and any thoughts or suggestions you might have for next year. Okay, and with that, I'll go ahead and wrap up today's webinar, and thank you so much to our ABLE advisors for joining us, and to Larry and Katie and Edward, and to Marlene and Jim for today's presentation. Have a great day, everyone.